Okay, folks, let's begin. Wait, am I even sharing or not? Can you guys see the screen? I'm sharing the screen, right? Excuse me. Okay, thank you. Okay, so let's begin. So today's session will be a quick one now, okay? Because we got a lot of open trades right now. And the portfolio is kind of like a bit full ready. That there's a lot of trade there. So most likely next week I'll be adding maybe one or two more trades. Then we just see how all the current trades turns out. Okay, because next week is the upcoming week. Is actually a very volatile week. There's a lot of stuff going on. So I just want to go through those and then go through our portfolio, and then we are pretty much done now. Okay, so next week we got two major stuff coming up. One is the federal fund rate, the FOMC meeting now, okay, which is on Thursday 3 a.m. So for US is Wednesday now, okay. For Singapore, we will eat into Thursday already. So Thursday 3 a.m. So at this for this, right, we will have our usual FOMC webinar lah, okay, meaning to say we will have like a live session at 3 a.m. in the morning. If you want to attend, you can attend. So what we usually do is we wait for the rate decision to come out. Once the rate decision come out, we will look at the FOMC statement that they give. And then within the statement, we try to see whether if they send any new messages, whatever, and then we will listen to the entire press conference by Jerome Powell, which is at 3:30. And then usually we are done around 4 plus now, okay? So sometime we can actually have some live trade if the movement is good, if the movement is good and clear lah, okay? So sometime, but not always. So whether or not we got a trade or whether you will get the trade, I cannot confirm because we have to see what's going on within the session itself lah, okay? So there was a period of time where for like 3 or 4 consecutive FOMC session, right, we don't really have any trades. And usually the FOMC session, even though it's at 3 a.m., I do get like 10 to 15 people like that. So not sleeping, going over to watch. And then after that, we got no trade, right? The latest, I believe the latest one or the second latest one, when I set up the session, there were only like 4 people there. And then just nice that particular session, we actually got a very good trade because the direction was good and the direction was clear, the risk is good, and then like almost everybody else miss out. So this kind of thing I cannot promise lah, okay? It's really dependent. So of course, if you have work the next day because it's Thursday lah, okay? If you have work on Thursday, then definitely highly advise you not to sort of like stay up too late for your work also lah. You have to wake up in the morning. So aside from Thursday, the FOMC, we also have the PMI coming out, the manufacturing PMI coming out. So if you were present yesterday, right, I have also shared one particular trade that one of my trainee took on by looking at the manufacturing PMI, and he was able to get one very good trade lah. And on Friday, we have the non-farm payroll. So we actually have two big events now, okay? The non-farm payroll, the unemployment rate, and the FOMC decision between Thursday, Friday consecutive, okay? And then on top of that, right, we still have all the earnings. So the earnings are quite important because we got the big one coming up, okay? So Tuesday is quite important because on Tuesday morning, we have Pfizer earning coming out. So we actually have a long position on Pfizer, okay? So Pfizer is quite important. And after that, Tuesday after market, we got AMD, Microsoft, Google, and Starbucks. So even though we don't really have these 4 stocks, right? Maybe Starbucks not so important lah. AMD, Microsoft, Google quite important. So even though we don't have these 3 stocks, right? They are a big part of the Nasdaq and the S&P lah, okay? They are currently what now known as the Magnificent Seven. So it is good to pay attention to this stock because it will actually move the market. And on Wednesday is US Wednesday lah, okay? There's FOMC, but for us is Thursday morning. And in terms of earnings, Wednesday, nothing much, but we got one FOMC ready lah, okay? So it's kind of a little bit hard to see what's hard to trade during this period also. For example, let's say your Microsoft and Google, the earnings come out to be very, very bullish, and then they go up. And then later the next day, the FOMC meeting come out, something bearish happen, and then they can start U-turning again. So everything will be all over the place now, okay? Which is why we need a long short portfolio. And then on Thursday, we have the PMI number coming out, the manufacturing PMI number coming out. But we also have another set of big earnings, which is Apple, Amazon, and Meta. So these three are quite like the initial three, right? These three are quite big weightage on our US indices also lah. Okay, so we do need to pay attention to these three also. So Friday, nothing much. Friday is mostly some random stuff lah. But we do have ExxonMobil and Chevron lah for the energy sector. I think this week there's quite a number of energy earnings coming out also. ExxonMobil, Chevron. I think earlier, I think there is Marathon Petroleum coming out also. Yeah, so we got all this stuff coming out. Okay, so in the upcoming week, let me summarize again. We got two macro event, which is the FOMC decision, and the other one is the non-farm payroll, the unemployment numbers on Friday. And then in terms of earnings, we got Pfizer, AMD, Microsoft, Google, and then we have Apple, Amazon, and Meta, and of course we have MasterCard here also lah. I'm not sure when Visa is coming out, but I think MasterCard is coming out first lah. Okay, I think American Express came out this week already, so we got a lot of stuff lah. Okay, so please pay attention to all your trade and make sure that you set your portfolio properly lah. Okay, so right now, as we look at the Nasdaq and S&P 500, things are like kind of a little bit sideways at the top there. US Nasdaq having a bit of problem around this area. It's like some bearishness coming in, but of course overall it is still a very strong uptrend now. Okay, even for S&P 500 also overall is a very strong uptrend. At the same time, we do have the yield kind of like sideways here for quite some time already. So I think for next week, the yield will probably kind of like stagnant a bit until the FOMC. When the FOMC come out, it will either continue to spike up or it will come back down. Okay, so personally, I think this year rate cut will happen. My personal opinion, but the question is when will it going to happen? So currently there is no projection for rate cut in January lah. Okay, which is the upcoming FOMC session, and I also don't think any rate cut will happen in March. If rate cut were to happen, right, most likely it will be in like around July, August, like in the second half of the year. I don't think first half they will be very aggressive to go and do rate cut unless something blow up in the economy. Okay, maybe some regional bank, some small bank blow up then, or maybe some REITs blow up, that kind of situation. But aside from that, right, most likely the rate cut is not going to happen in the first half lah. Okay, so for stock market, right, you don't really need rate cut for stock market to be bullish, as long as things are stable, right? As long as things are stable and we have a good projection, a good idea of what's going to happen, meaning we have information, the market is like not kept in the dark like that, then the market can actually rally even higher. Okay, so even if currently at right now the federal fund rate continue to stay put at like 5.25, currently right now is 5.25, I think overall market can still continue to rally lah. So don't get too overly reliant on rate cut for the market to rally, because even without the rate cut the market can still rally lah, because there's overall even with this very high restrictive environment, right, there are actually a lot of companies that are actually sort of doing quite well also lah. So this week, right, we have Netflix earning came out, so we went through Netflix yesterday. It was doing very, very well. Most of the major subscriber, major region, the subscribers are up lah. You can definitely see from the earnings here also that there were like one big gap up, then after that another two more green candle here lah. Okay, so the disappointing one is actually Tesla. So Tesla is forecasting slow growth in 2024, mainly because they have to slash a lot of their prices, their product prices. And even though they didn't say why, but I think we can somewhat guess also like it is mainly due to China flooding the entire world, like entire world with their cheap EV lah. Okay, so in terms of quality wise, I mean I'm not sure lah. Okay, I'm not a big fan of China product, but I think BYD is actually quite good. BYD is quite good lah. And in fact, the market right now is being flooded by BYD cars lah. So Tesla actually have to slash their prices, especially in China, in order to compete, and it is sort of hurting their overall profit margins lah. Okay, so aside from that, during the conference call, they have Tesla also mentioned that they foresee the growth to slow down in 2024. So their earning is actually declining really lah. Okay, so in terms of the overall all the stocks, right, all the big cap stock, Tesla is performing the worst. It began 2024 somewhere around here at the top, and then it just go one line down lah. Okay, haven't even recovered yet. So if you look at this channel, we are kind of at the bottom of the channel already. But I'm not really going to bottom pick this also, mainly because it seems like there is sector related risk going on in the EV, not just for the US EV, right? Even for the China EV, companies like NIO, Xiaopeng, among all this stuff. Like for US, we have Rivian, we have Lucid, all these companies, they are not doing that great lah. So it is kind of like a sector issue lah, sector related issue. We haven't really figured out what's going on over there. Mainly because, right, if China did flood the entire market, then we should only see the US EV coming down. But no, in fact, China's EV stocks are also coming down. So it is kind of like a sector-wide issue. Okay. So it is good to monitor all this stuff and try to figure out what's going on over there, because if you can do that, right, and if all these headwind sort of like resolve, then eventually we can bottom pick perhaps maybe Tesla or even Rivian in the future lah. Okay, in order to ride the trend upward, because from what Tesla mentioned in their earnings call, right, it seems like 2024 is their down year, and then after that they will have another very big growth cycle because they are working on certain AI related R&D, self-driving, all this kind of stuff lah. Okay, so right now they are a bit in the slow growth phase, but after all these things pass, right, they will probably like shoot up like crazy again lah. So we do want to pay attention to this also lah. Okay, so aside from Tesla and Netflix, the other big one is actually Intel. Intel actually dropped quite big. Where's Intel? Sorry. Oh, I don't have Intel here. Intel is at the bottom. So the other one is Intel. Intel actually dropped 11%. So okay, even though Intel dropped 11%, right? I think prior to this drop, Intel actually have a very big rally lah. Okay, so if you consider Intel stocks, right? If you look at the entire 2020 period, this entire period, they are basically flat lah. Okay, like companies like Nvidia, AMD, they make like crazy high, like 300, 400, 500% gain, right? Intel actually kind of like stuck there. So during 2023, right, they did have somewhat of a good rally, about 100%, 109%, but I think maybe that is as far as they go lah. So right now they are coming back down already lah. Okay, so they seems to be facing some growth issue. They are actually downgrading the revenue forecast, all those kind of stuff lah. Okay, so that is based on Intel. So in terms of tech earning wise, it's a bit mixed. Netflix was good, Tesla was bad, and then American Express was good, and then we have Intel was bad, and then who knows what's gonna happen next week also lah. Okay, so now going on to the portfolio, I actually have quite a number of positions, but most of the position are kind of like waiting for stuff to happen now. Okay, so now let's go through them. Okay, so I still have First Solar expiry on February. So this one I don't have, to be honest, I don't have much hope for this lah. Okay, unless something big happen and then the whole stock rally lah. So in fact, the FOMC that is coming up on the upcoming week, right? It can have positive impact on First Solar also, because First Solar is a very yield sensitive stock, interest rate sensitive stocks lah. Okay, so if let's say the FOMC is going to reiterate a rate cut, or if they, like, by some miracle they give us their actual plan on the rate cut, which I highly doubt so, then First Solar can actually rally quite aggressively lah. Okay, so First Solar, if it does rally, right, it rallies in a extremely aggressive manner. So even though it is currently right now somewhere here, right, if it start to shoot, it can shoot up very, very fast one. It can actually shoot up very fast one, like what you are seeing here, okay? Like what you are seeing in all this level. So the earnings is on 22nd February. So unfortunately, this this particular option will expire before the earnings lah. Okay, so we will not have the earning catalyst, but we will have the FOMC catalyst lah. So we can hope for that. So the other two positions that I'm holding are stock position. They are not option position. One is Allergen, one is on holding. So Allergen, initially it went up very, very big, and then after that it gapped down and then it recovered again. So I do hope that this is like the bottom lah. Okay, I do hope that this is like the bottom, and then after that, if it can continue to hit higher, right, it will be good. So once again, for Allergen, we are it is a mechanical trade. We are actually waiting for the short squeeze to happen. So like I'm actually looking at all kinds of new coming out for Allergen based on whether how their clinical trial is, whether it's successful or not, FDA approved or not, all this kind of stuff lah. But any small news that come out that can push this stock up but significantly, right, then a short squeeze can actually happen, mainly because this is a very heavily shorted stock lah. Okay, so if a short squeeze does happen, I'm looking for like a very, very big gain, like over 100% gain lah. And that's the reason why for Allergen, it is a stock position. It is not an option position, because we have no idea when the short squeeze is going to happen. And we don't want the stock, we don't want the option to expire before the squeeze happen lah, which is why we have a stock position instead. So my on holding, it has been there for a very long time already, all the way from September last year. I entered this on September last year lah. Okay, so on holding, nothing much going on for now. It is kind of still sideways, kind of like stuck sideways here. So of course, earning is coming up, but earning is still quite far away lah. Okay, it's on 15th of March, so I don't really need to bother about earning also. Because this is a stock position, not an option position, so it's not gonna expire. But what I am considering right now is to sell covered calls lah. Okay, previously when on holding rally here, right, I didn't want to sell any covered call because I scared that it will shoot up, and then and then because of my covered call, right, my profit will be capped. That's why I didn't do any covered call there. But it seems like it's kind of going sideways here, so I may consider selling covered call next week lah. Okay, so if you are like me, still holding on holding, right, you can sell some covered call. Maybe I will choose February expiration, or maybe even the March expiration now. Okay, so we can choose the March expiration, and then we let the before the earnings come out, we can actually exit that particular covered call. So I will take a look at it on Monday. Actually, on holding, the option premium is quite good one. You can get quite a bit from the premiums lah, compared to the stock price lah. Okay. The other one is Disney. Okay, so now that I've covered my two stock position, right, I want to go through my overall option position. So what you can see here is that my option position, the one thing to note is that they are not expiring on the same month, meaning to say, like, all of them, right, they are not expiring on the same month. For example, on February I have First Solar, I have Zion. Then on March I have Disney, Pfizer, and Symbiotic. And then on April I have Blackstone, and then on March I have AMR. Okay, so we don't talk about the short leg lah. Okay, I'm actually looking at the long leg, because the short leg expire then is actually good for us. So you can actually see how I spread out the expiration, because if everything expire on the same day, right, it's quite dangerous, because if all your trade doesn't work out and everything expire, right, then your entire open position will straight away go to zero lah, okay, and then you're gonna lose like a big amount. So it's good to spread out your expiration also. So now Disney currently actually doing quite well. Let's take a look at Disney. I personally have quite high hope for Disney lah, okay. So initially retrace, and now it recovered back to the resistance level here like that. And of course, Disney definitely, it will be affected by the FOMC. It will be affected by the non-farm payroll, and of course the earnings, which is coming out on 7th of February. So it will be next week lah, okay, next week. So I have high hope for this, in the sense that I hope that when earnings come out, right, it can actually push the stock significantly higher lah, and hopefully like we can exit before the February expiration. Mainly because if it come out on the 7th of February and the stock goes up, gap up, and then we have one more week before the February expiration, and then we can exit the trade. I think even if it goes to like 105 like that, the reward is actually quite good based on the structure we have here. Okay, so the other one is AMR. So AMR actually rally quite big from our initial entry area. Let me go and find AMR. Okay, things are always very hard to find. Okay, AMR is right here. So AMR, for the past 3 days, it came down again, then recently went back up a bit again. So because for this particular trade, right, we have all the way until May. So I'm not really that scared. There's a lot of time. So we got earnings coming out in March in order to push it down. Like there's enough time for stuff to happen now. Okay. So mainly right, they are actually not doing quite well. They are not doing that great lah. But the reason why it is rallying so much is mainly because AMR, the management, right, is quite good. They manage, even though the profit is dropping very bad, they managed to buy back a lot of shares. They managed to reduce their debt. So they actually reduce a lot of their liability to almost zero, and at the same time they are buying back a lot of shares, and then they are giving out dividends. But from the latest earning, right, they are actually going to stop giving dividend already, meaning from this point onwards, from this dividend onwards, there will not be any more dividend already. Mainly because number one, right, they have depleted a lot of their cash on the share buyback. And then number two, right, they actually don't have a lot of cash, mainly because they are not getting in new cash because of the fact that their earnings is not very great lah. So with this dividend as a carrot gone, right, I do believe somewhere along the road it has a big room to fall lah. And I'm hoping this earning will be the one that bring about that big fall. Okay, so since our option expire in May, right, we just let it be first. And then the short leg is going to expire in February, and then after that we can short like either April or March put options lah, okay, and then we see what we can do from there. So the other one is Zion earning came out. The earning wasn't that great, but overall the bank sector kind of recover lately lah, okay. So Zion actually, I remember when we short, it was around here. And then after that it went down a bit, and then before the earnings it went up 4%, but actually here is kind of like facing a bit of resistance here lah, okay. So this one, the expiration is on February, so we have about 4 weeks to give it some time to come back down, maybe at least to 36 or 34 lah, okay. So once again, Zion, it is a rate sensitive stock also, because it is a bank. So we still have FOMC as a catalyst in order to push this downwards lah. Of course, if FOMC is bullish, right, then definitely Zion is not going to go down lah. But if FOMC is bullish, the other long position that we have should go up and make more than what we actually lose in Zion now, okay? Because Zion have a 1:8 risk reward ratio, right? So my risk on Zion is actually quite low. If you calculate the maximum risk here, is somewhere around 3,000 plus only, because right now I'm risking about 4,000, 5,000 per trade. Okay. So, but for Zion, I only risk about 3,000 like that due to the fact that the risk reward ratio is very high. So if let's say this trade were to lose, right, I'm not going to lose so much also. Okay. So I think Zion, personally, I'm not that scared lah. But on your end, right, you do have to work out your lot sizing a bit to ensure that things are within, like, your portfolio is what you want lah. Okay, so when you are following trades, right, it is important you don't anyhow blindly copy. At least try to understand what is going on and try to sort of ensure your lot sizing is taken care of. So the other one is Blackstone Mortgage. Blackstone Mortgage, this one BXMT. Currently there's only a simple put option. There's no complicated structure, but eventually I will put in some structures, okay, because I just want to see how the initial movement is like. So the earnings is on 14th February, which is coming up next week, next week. So it's still quite a bit away, but once again, this is a REITs. REITs are very rate sensitive also. So FOMC is another big catalyst for this lah. Okay, whether is it upside or to the downside, we don't know lah. But nonetheless, it is actually a very good catalyst for REITs like Blackstone Mortgage Trust also. So you can see it has a very big down move here. Then after that, kind of like slowly going up like that. But I think eventually it will come back down also lah. Okay, so have to be patient lah. Have to be patient. So for Blackstone Mortgage Trust, expiration is in April. The reason why expiration is in April, because like even after the earning, right, we want to give it some time lah. Okay, it's actually quite slow moving. If it is not trending, right, it can actually go sideways for very long one. So we kind of have to take that into account also. And the last one is Pfizer and Symbiotic. So Pfizer earning coming out next week lah. Okay, so we just wait for the earning. And once again, the expiration is on March. So there's a lot of there's still a lot of time left for this to move. So I'm not really too worried about this. The other one is Symbiotic. Symbiotic actually came down mainly because the yields are going up. But once again, right, Symbiotic is actually a very volatile stock. Okay, when it move, it can move quite crazy one lah. So Symbiotic earnings is on 5th February, which is like soon, next week. Sorry, next week, next Monday. So we actually have a lot of earnings that are coming up for most of the position that we are holding now. Okay, I think right now only Zion earning came out. A lot of other earnings are still pending now. So we need to wait for those earnings to come out. And then after that, we can then say, okay, this trade is gone, that trade is profit. So even right now, if most of the trade are like kind of losing money, not doing well, I'm not really worried, because our strategy is using earning as a catalyst lah. Okay, so once the earnings come in and the stock goes in our direction, right, the option price it can actually flip very strongly one. There are occasions where I bought certain options, and then before the earning, the option price is like very close to zero because it went in the other direction. And then after that, when the earnings come out, the stock U-turn, right, the option from zero, meaning the value zero, it can actually spike up to like crazy high one. Okay, so that is the nature of option itself. So we have to wait for the earnings, and then after all the earnings come out, then we see what's going on lah. Okay, so now for next week, right? Next week, I do have quite a number of stuff I want to take, but I'm limited in terms of position, because I currently have 1 position, 2 position, 3 position, 4, 5, 6, 7, 8, 9. I got 9 position that is open right now. But when February 16 come around, right, I will have 3 position disappear. So sorry, is it 3? First Solar and Zion. Yeah, sorry, 2 position. I will have 2 position that will be gone on February 16. So I have to take that into account also. So going forward, right, I think I will go for Apple short ready on Monday, because Apple earnings is, I believe, on Thursday lah. Okay, Thursday after market, Thursday after market is Apple earnings. So I want to get that position in before the earnings lah. Okay, because we are going for the earning gamble on Apple also. So Apple will be playing towards the downside, and then at the same time we will probably enter QQQ. QQQ is the Nasdaq ETF lah. We'll probably play QQQ to the upside as a hedge against Apple to see which one works out lah. Okay, if one of them doesn't work out, never mind. The other one will definitely make a lot of money lah. Okay, so that is what we'll be aiming for. And then aside from that, another sector that I'm actually looking at is the luxury sector. So we have LVMH earning came out doing very, very well. And then we also have Hermes actually rally together with LVMH. So all these luxury brands are doing very well. Okay, so of course LVMH and Hermes, right, they are not on the US market. They are actually, I believe, on the France. Is it France or Italy? It should be France. In the French market. But on the US market, right, we do have one luxury brand also. It is Zegna. So Zegna, they have a lot of brands. Okay, and one of the brand under them is Tom Ford. And I have actually I've looked at quite a lot of Tom Ford stuff. I like their stuff, but it's super duper expensive. So I only can afford their spectacle frame from Tom Ford. So they got like wallet, other apparels also lah. Okay, wait now, let me go and find Zegna. So you can also see Zegna also rallied based on the based on LVMH earnings also. And you can also see that Zegna actually dropped quite significantly lah. Okay, but if the overall luxury sector is doing quite well also, right, I think this is a good bottom to buy in, and hopefully it can rally higher lah. So the only thing that I don't like about Zegna is the earning only comes out once every 6 months. So the last earning that I will have access to is on September, I believe. Yeah, so we have to make do with that lah. Okay, but I think this could be a good bullish trade that we can take. But whether or not I may take this trade, I'm not sure yet, because I got too many position ready. So it is important to like come to the webinar and at least have a listen also, because aside from what I post on the actual trade that I take, right, I will also recommend a lot of other stuff that you can actually take the trade yourself. Go and work out your risk or your position or whatever lah. Okay, that I feel that may do well lah. And in fact, there are a lot of times where trades that I personally took did not do well, but there's a lot of other trades that I recommended did very well. And one of them is actually CrowdStrike. I actually recommend CrowdStrike. Like way back here, I was saying after the whole Palestine and the Israel conflict happened, I was mentioning the security stock could have a catalyst from that. And in fact, from then, right, it actually went up like about close to 64% already. So these are the things that you probably need to like sort of do your own due diligence, but I can give you the exposure lah. Okay, this is what we are looking at, but we probably will not take this trade, but you can take the trade if you want. So don't just close eye and copy trade lah. Okay, try to think for yourself and take your own trade also. So another one that I'm looking to take is SEMrush. SEMrush is a tech company. This is I'm looking to take this on the bullish side, but right now it is kind of like in a downtrend lah. Okay, it's actually kind of in a downtrend, so I just want to wait for the upward momentum to happen. So hopefully at some point there will be a higher low that happen. And another one that I often mention is Shake Shack. So even though we officially did not have a Shake Shack trade taken, previously we have the first trade that did very well lah. Okay, but after that we want to sort of like go for a second entry, but we didn't really have the second entry. But if you do manage to take this trade somewhere along this rally, right, I think it is a very, very good trade also. I think it's in a very good position now. Okay, and earnings coming out on 15th Feb. So perhaps I may want to play a YOLO trade, YOLO earning trade on this lah. Okay, so I see what I can do with this also. So on the short side, I don't really have a lot of stuff on the short side. Currently, right now, the shorts are a bit hard to find. Okay, most of the things are on the long end. Of course, we have Apple short, which is like also considered a speculative play, lah. Okay, so one of my graduate actually gave me Boston beer as a short idea, but I haven't looked through thoroughly yet. I personally think Boston beer is on the bullish side, but I mean, usually when I get an idea that is exactly opposite from mine, right? It's good. It's good because I get to understand what is the other side is thinking, and then it could be that the short idea is actually valid, and in fact, I may also change my mind. So this is something that I'm taking a look at. So Gentex, yesterday earning came out. It is one of the trade that my other trainee took also did very, very well. So this was the trade that I was talking about where we were using the ISM report as one of our tools to find our trade ideas. Okay. So that's all I have for today. So let me just summarize for the upcoming week. We have FOMC, we got non-farm payroll, we got all the big tech earning, AMD, Microsoft, Google, Apple, Amazon, Meta, this 6 big tech coming out. Okay, so for stuff that we are holding, we have Pfizer coming out, and I believe Symbiotic is also coming out next week also. Well, let me just do a quick double check. Symbiotic coming out next week on 5th. Yeah. So we have sorry, Symbiotic is next week. Okay. So next week only Pfizer that's coming out, but on Monday we will go for the Apple put option. Hope that during earning it get down big lah. Okay. But once again, that Apple trade is a speculative trade. So it is not encouraged that you play a big sum of money. Play small can ready lah. Okay, so that's all I have for you guys. Thank you very much, and all the best next week. It's gonna be quite a crazy week. Bye bye. Have a good night. Have a good weekend.